All right, so I wanted to go over the news from the past week. As far as the market goes, we didn't have nearly as busy of an earnings week as we did the last couple weeks. Still had some important stuff come out I wanted to go over. As far as the market goes, the S&P was basically flat. It was down slightly, basically flat though, although it was down pretty significantly on Wednesday and on Friday. I think the market's trying to figure out where it wants to go, right? It can't really find a significant direction. I mean, if we look year to date, even let's check 6 months. I mean, we did briefly, actually, since January, we haven't gone below, I guess we went below, we went below 3,900 twice, but both times it went right back up. So, and again, we've been as high as about 4,200 roughly. So that's kind of the range that the market is in, and I think it's kind of waiting to see two things. Will the Fed, well, it's when will the Fed pivot, not will the Fed pivot, because I would be absolutely shocked if they haven't done it at some point within the next 6 months to a year, and I think everybody would agree with that. So the question is, when does the Fed pivot, and why does the Fed pivot? Do they pivot because we have a massive implosion on our hands, like worse than 2008 or comparable to 2008? That's the big question, and I think the market's kind of trying to figure that out. Everybody knows there's going to be a recession, right? I mean, that's what everybody's talking about. Everybody's worried about a recession, and like I've said a million times, when the market when everybody's expecting it, the market is already pricing it in. So the only way we're going to see a significant correction, I'm talking more than 10% lower than where we are right now, it's going to have to be a very, very, very bad thing, like very bad. And some indicators point to that, but the thing that I would point out, that just means the Fed's going to pivot sooner. And the other big thing too is that timing the market is very tough, right? Because when everybody's expecting something to happen, it's very unlikely that happens. So that's the first thing I would point out here. Like I said, S&P was based just down a hair on the week. On the month, it is also basically flat, almost exactly flat. Again, it's choppy. It's just trying to find a range here. Oil's been on a downtrend over the last month or so, very clear downtrend. It was down a little bit on the week as well. I think that's due to recession fears. But you also need to keep in mind, oil producers will cut production. They already have cut production, but if we get a deeper recession than expected, they'll just cut production to make up the difference. So I don't see a significant correction in oil prices either. And again, if we do, eventually it will pick back up. As far as other Bitcoin goes, Bitcoin's also been down fairly significantly after, I mean, not for Bitcoin, but over the last month, again, started about 41,000. We're back down to about 36 and change. Bitcoin will follow the market. If it's down, it will go down more. If it's up, it will go up more, in my opinion. I think that, although, again, if you look at the last 6 months, very, very clear uptrend. And I think that will continue over the long run. If we get a deep recession, I think that will hit Bitcoin pretty hard. But you also need to keep in mind that the halving is coming around next year, and that probably will be coinciding with a Fed cutting cycle, which will, in my opinion, be a double whammy, just bringing us into the next bull market, which will take us well into the hundreds of thousands of dollars. So that's another thing to keep in mind. As far as the NASDAQ goes, the NASDAQ was actually, I believe, up a little bit. Let's check and see. Yes, the NASDAQ was up a little bit. Same goes for the last month. It is up a little bit as well. So that's another thing to keep in mind. You got to follow. Those are probably the big two index. I mean, the NYSE as well. But the NASDAQ being up, again, the NASDAQ is more of a risk-on index. And when it's up, it's up, right? Volatility index is still very low, 17 on the VIX. So again, that's the market over the next week. Like I said, I believe that the market is just waiting to see what the Fed does next. That's what I think. As far as companies releasing earnings, Petro Brasilio I don't even know how you pronounce it. Again, they're the big state-run oil company in Brazil. They have a very high dividend, 14%, 50% earnings yield. So that's why you're buying a company like this. You get a crazy high dividend, crazy profitable company, but you also have to keep in mind that they are a state-run foreign company, which obviously adds a lot of risk. If this was an American company, it would be double, triple the price where it is right now, in my opinion, right? I do have 100 shares. Again, I'll probably keep it because they came out and they're committed to keeping the dividend, and they're hinting at a share buyback, which is exactly what you want to see. So I would hold this company. If you get a correction, maybe a time to get in. Again, it is very risky, right, given the foreign aspect of it. But again, you also get a very high upside. The next one is Suncor. This is a company I have a small position in. Earnings were way down on the year. It hit the stock pretty good. I mean, if you look at the week, it's down very significantly, actually. Started out at about 30 and a half. It's down to 28. So that's got to be almost 10% down. No, about 6%. So that hit it pretty hard. Although if you look at it right now, it does have a very attractive dividend, right? I mean, you're looking at, if it would load here, I think it's about 5.3%. Again, the payout ratio is only 30%. So this company is very profitable. They are also growing that dividend over time. I mean, they cut it in 2020, but they're higher than they were before that happened, right? So again, they're growing their dividend fairly nicely. That's what I like about this company, right? The next one, Devon Energy. This is a company I have a solid position in as well. It got hit pretty hard too. It missed earnings by quite a bit. If you look at the 1 week, it's down pretty significantly. It started out at about 51.7, down 8% on the week. So that's very significant. But again, 19% earnings yield. Where's the dividend at right now? That's not the right dividend. The dividend's kind of all over the map on this one. It's kind of hard to get a reading on, but it's still a solid company. Again, it's going to follow the oil and gas pricing as a whole. The next one I have on the list here, Skyworks Solution. This is I put it in wrong. This is a very interesting company. I don't have a position in. I'd like to get a position in at some point, mainly because it's got a nice dividend and it's growing it fairly nicely as well. But again, you also need to keep in mind here, it's actually priced very nicely. But again, if you look at the 5-year stock growth, it's basically flat. It's basically flat. And that's something that's very concerning to me. Growth is a concern on this company. The profitability and the returns are very nice. The balance sheet looks fairly nice. The dividend is very nice. But why is the stock price not going up? That's the only thing that's held me back on this company. What's going on there, right? What is going on? I mean, if you look at the last 10 years, it's massively outperformed the S&P. But if you look at the last 5 years, it has not even close. Even if you include dividends, it's only up 5%. So that's something that's really concerning to me, right? If we go into the financials here, let's go into the financials. I'm not getting it to load properly here. Let's try it again. So I mean, if we look at its gross profit over time, I mean, it's going up fairly nicely. So this is a company, honestly, I'd have to dig a little bit deeper on. This is something that I'm just getting into now. I'm not going to get into it a little further. I do find it very interesting, but I would need to dig a little bit deeper, because from the outside looking in, it looks fairly solid, but I would have to do a little bit more digging. It is a company I like to follow, because if it does get some tailwinds, I would like to start a position. But again, I would need to look into it a little bit deeper. Palantir, this is one that everybody likes. It had better than expected earnings. It was up quite a bit. I mean, it was actually up a lot. I mean, it was up, what is this company up on the week? Like 23%, which is just utterly insane. This is a very interesting company. I have had a position before. I sold it. I don't even remember if I was up or down or not on it, but that doesn't matter. This is, like I say, very, very intriguing company. I'm still not sold on it, to be quite honest. If we look at its valuation, it doesn't even have a valuation here. That's kind of odd. But again, there still is concern here. There's returns concerns. There's profitability concerns. It's growing very nicely. But again, this is just a classic growth stock. They are increasing shares a lot, which is concerning to me. That's not what I like. That's not what I want to see. I do like to keep an eye on it, though, because I think it's a very interesting company. This is another company, Lucid, that's in a similar position. Again, earnings were down, revenue is down. This is a company that I don't think I would touch it with a 10-foot pole where it's at right now. I mean, terrible returns, terrible valuation, terrible profitability. It's not even growing that good. Financial health is not, it's okay, I guess. It's so-so. But again, they are issuing shares, right? And that's the thing you always want to keep an eye on. Companies that are perpetually issuing shares are companies that you want to stay away from. You wouldn't want to touch it no matter what, right? That is one of the few metrics that I think you can probably say 99% for sure whether you should not buy a company. If they are perpetually issuing shares, you do not want to touch it, right? Just my opinion, but I don't think that there's a good example of a company that you want to do that. And the reason for that is that they're taking away returns from you, right? And who wants that, right? Who wants that? So anyway, that's what I wanted to bring up this week. Very interesting, I think. I think it's very intriguing what the market's going to do over the next couple, 3 months. The yield curves are pricing in rate cuts probably in the summer, if not the fall, which is going to be very interesting to see, right? Very interesting to see. So anyway, that's what I wanted to bring up today. If you liked the video, make sure you hit that like and subscribe and stay tuned for more.